The new CPI data gave the markets hope. Let's talk about it. I am Dr. Stock, Doctor of Education, and I told a duck a joke the other day. It didn't laugh, but it did quack a smile. All right, I got a big day of charts to talk with you, so it's going to be I got a big day of charts to share with you. There's a ton packed into this information. I'm going to keep it as neat and concise as possible. CPI coming in a little bit soft for us. Retail sales also coming a little bit soft. Now, mind you, overall for retail sales, not great talking about the strength of the consumer. However, the rate cuts right now are taking that forefront from the Fed. So things that cause us to pull back from that a little bit, seeing that inflation isn't necessarily running away on us, those things are going to be interpreted positively for the markets for right now. And so let me talk about some of those interpretations as far as what we have here and also what that looks like for the long view of things, just different things you should be watching, and also toss some stocks in there as well. So SPY, check this out. So we had this ascending wedge pattern going on, and I said that if CPI was bad, we could fall at the bottom of this, and then we could trade a lot lower from there. And if we broke above the top trend line on good data, then we could see those higher highs put in. And as soon as we hit those numbers for the CPI, I said over in the Discord, it's available through my Patreon. That link is down in the description, by the way. I said this means new all-time highs for the markets. And I didn't know just how soon we would see it, but man, we didn't have to wait long at all because we were darn close to it already. But then we saw that come in, at least as far as SPY goes, as far as QQQ goes, and on an inflation-adjusted basis, we're actually still a little bit south of that. So still looking at this, here's QQQ, much the same chart that we had. We could still put on another about 3% in SPY and about another 4% in QQQ before we find the next top of where things are at for us. Now, mind you, that doesn't mean it's a straight path to get there. We could definitely sell down in order to get there. And all you got to do, grab the Fibonacci retracement, most recent top to the most recent bottom. And you can see that takes us up to about 470 for QQQ. And when it comes to SPY, if we do that same thing for this one as well, top down to that bottom, that puts us at about 543 from where we're at right now. So like I said, about 3% for the SPY and about 4% for QQQ, just based off that metric. And what we're going to be looking for is where that top could come in next. So moving over from there over to Bitcoin. Bitcoin yesterday, this is one that I talked about. I have been talking about Bitcoin, about this inverse head and shoulders, the importance of breaking the top of this bearish channel that we had here that was also serving as the neckline for that inverse head and shoulders, and how important it was to break over that 50-day on good volume. Well, we got some darn good volume. We're up above the 50-day. Today, it's important that we stay up above that 50-day. This thing, I'm telling you, could put up, we could see a new all-time high in Bitcoin coming out for that as well. So that could put us in that 70,000 range. Honestly, really, because it is crypto, we could see that at any point in time. But I would say over the next 30 days, if we're going to get it, I think that we're going to see it somewhere in that time. So from where we're at right now, in May till probably mid-June-ish or so. By the way, it's my oldest sister's birthday today, so happy birthday to her. But we could see Bitcoin go back and retest that all-time high. We'll probably hit some resistance at that point in time, but we still have, I would say, if we are able to break that all-time high, then that puts us in that mid to high 80s range for Bitcoin. We're going to have to be watching for it. Now, mind you, there is a longer story that takes place here. So just a little bit longer view of inflation for you. Typically, June can be a bit of a high point for us on an unadjusted basis. So we'll get those numbers in July, which means that July could possibly start the market selling down on us. July is usually a little bit softer, but then we also get a resurgence, a peak somewhere in August, September, October. And being that it is an election year, that's a critical time to watch those inflation numbers come out. And so if all three of those months come in soft, that could be a good thing for us. But I do think that as we get into the end of the summer, beginning of fall time, I think that we're going to have a lot of uncertainty come into the markets, especially as we get close to trying to position ourselves for who exactly is going to win that election. Is it going to be more blue with the Democrats? Is it going to be more red for Republicans? We're going to have to see as that comes out and plan accordingly. And so that's something that I'm also looking into as we get closer to that time. But for that inflation, as far as that goes, we really want to pay attention to what historically happens with inflation during those times. Like I said, we normally get some sort of peak that happens in June, and then an even bigger peak from that somewhere between August and October. It really just It depends on the year. It happens to be one of those 3 months. So if we see August is high and then September starts to drop down, typically we tend to continue to soften through October. And then if we don't see that spike in August, then it can hit September, October. Really, we just have to play it month by month as that CPI data comes out. And we want to pay attention to energy prices as well. All right, going back to the charts here. So end phase I've been talking about for a while. Check this out. We got narrowing of the Bollinger Bands, and you can see when that happens in the past, some sort of breakout happens where we start to get a little bit more volatility in it. Here we went real narrow, dropped down to the bottom side because we got rejected off the 50-day. And then when we look here, narrowing again. And well, what about those 50-day simple and exponential moving averages? We have like every moving average under the sun converging in this area right in here. So we have the 20-day simple moving average, and we're above that. That's bullish. There's the 13 EMA in yellow, the 5 EMA in green, and we have the faster ones crossing over the slower ones. That's a bullish thing. We're also above the 50 EMA. You can see that we came up and hit the top of this trend line. We actually retested the 50 EMA and SMA right in here and found support. And also, where did we close yesterday? We closed above, just barely, but we closed above the 200-day. We could possibly, if we can hold that 200-day, if we could see more price appreciation, I'd like to see one strong green candle on good volume up above that 200-day. We're going to hit that golden cross moment if that's the case. And I hope so, because I have a dollar cost average position in here, and I also have an options position for end phase, a rather aggressive one if I do say so myself, that we could possibly see significant percent upside from where we're at right now. We'll see if 120 is where we happen to catch that resistance coming in, or will we see a top more like the 130s, or is it going to be more like 140? I think 130 to 140 is a really good range for us. If we do catch that golden cross, honestly, we could even see numbers coming out that are like 150-ish, I would say, would be about where we would find that really heavy resistance coming in for us. So in phase, if we can break the top of this trend line, the one that you see right here for this this consolidation pattern that we have, breaking that is something that we failed to do. Even though we broke the 200 several different times, we haven't broken that trend line. And so that's the big tell that we're going to get. So I could go, if we do break above the top of that and the market conditions are still favorable for companies like Enphase, breaking the top of this one, I think would be really, really strong confirmation of some upside. And I think I could go really aggressive with some short-term options on this and really get paid handsomely for doing so. So that's a little bit the strategy for Enphase. For Tesla, Tesla's still sort of deciding. We got the RSI on the daily chart sort of consolidating. We're above the 50-day SMA. Good. We're below the EMA. We closed below it yesterday. Not great. And then also about the other moving averages that are in there. Let me really stretch this out for you. We kind of have the 5 and the 13 kind of mixing around in here. And so really the question's still out there for Tesla in the near term. We really need some sort of catalyst beyond EV sales, which, mind you, June 1st, June 2nd, somewhere in there, when we hear numbers out of China for their deliveries, that's going to be impactful. And then also July 2nd should be when we get quarterly delivery numbers coming out of Tesla as well. Those are going to be big catalysts. So you want to mark the first on your calculator. My goodness, I'm a math teacher, so there's that for you. Mark that on your calendar. June 1st for the numbers out of China, where we should get delivery numbers and where we should get indicators about Tesla from China itself. And then quarterly numbers overall, we should also hear from Tesla on July the 2nd. So a little bit mixed right now on Tesla. We need to wait and see which way we really break out of this thing. And so far, like I said, mixed signals. We're in a no man's land of bearish and bullish, at least on a short term, although we are down below the 200-day, which is bearish. The RSI is up, still above 50, but barely. So we're bullish, but barely. We're up above the 50-day. That's a good sign. The 50-day simple moving average, but down below the 50 EMA. So for Tesla, sort of kind of stuck in this middle right now, still deciding what to do. Not horrible outlook like we saw back here. Not super positive outlook like we saw up here. Just kind of in the gray middle, looking for that next signal to come along. And I think that we'll get that answer in the next 2 to 3 weeks, if not sooner. So watch those moving averages. Going to be highly critical to see what direction we go. We do want to see this yellow line cross over the red moving up this way. If we do, that's a very bullish signal for us. Also further strength for the RSI. And if we go out to a weekly basis on Tesla, we can see the RSI still sort of climbing. Actually, let me do this for you so you can really see it. We got climbing momentum here. Really, that big moment is if we're able to cross 50 on the weekly chart on the RSI. That would signal a longer-term bullish trend. And so we want to be watchful for that. because that can really help us out for Tesla, for those of us who are bullish on Tesla. If we fail to break over that, or if we dangle off these moving averages instead of riding, these are dangling off the moving average, the 5 that you see here. That's a bearish thing. It's when you are riding on top of them that you get the bullishness coming out right now. And so when you look at this, we're neither riding on top, we're not dangling off the bottom, and that's what I mean by we're really mixed on Tesla at the moment, so no clear signal of direction. Moving over to NVIDIA, there's my $1,000 stock price prediction, which going back here, when the stock dropped all the way down to $756 per share, was like, oh man, is that really going to happen? Is it really possible? And I'll tell you what, it's tough to stick to your guns with this $1,000 run up, but we were able to retake the 50. We kind of traded around it for a little bit. Now we have that as support for us with that 50-day simple moving average. I'll stretch that out for you. You can see that blue line a little bit better in here. Moving along, we're up above this top trend line. Excellent. You can see we even tagged it for some support. Trading up above in the pre-markets, up above yesterday's close. So those earnings, by the way, are on Wednesday after the market closes next week. That $1,000 price tag, I'm going to keep my fingers crossed that we hit it before or just after. And I expect that at some point in time, we're going to actually have another healthy pullback for NVIDIA's prices, but we're going to have to wait to see for earnings to have a better indication or timing of that. So what we're looking for NVIDIA is we're looking for continued demand for the foreseeable future. So that's what we want to hear in order to keep that price strength going. If there's any sort of doubt that things are any sort of indicator, I should say, that things are drastically slowing down for NVIDIA, that we're not seeing that same sort of demand, or that the supply side is really catching up, and acting as a balance to that demand where they can't charge as much for their hardware with that same amount of margin. Those are all things that can affect it. So it really is a big question mark. I think there's enough hype here that we could still hit that $1,000 mark. All right, now for some bonuses for you if you stuck around this long. Intel came off a critical trend line down here and is showing some signs of consolidation, that we actually broke a downtrend just after this candle here. We hit this bottom down here, and now we're starting to inflect back up. And you can see in the pre-market hours that the 31.58, and we're actually starting to get that green 5-day EMA coming up to the 13-day EMA that we have right here, and getting that cross could be a near-term bullishness. We came off oversold. We're still in bearish territory, but again, that RSI cross that we would get up over 50, which is all the way up here, that could be a good thing for us. It's encouraging that we have a higher RSI measure than we did back here, this previous peak that we had. And what we're looking for, should this thing soften a little bit, is that it continues to climb anyway and cross that 50. I think things are overdone for Intel. They're not necessarily my favorite chip company that's out there. However, I still think that it's one that deserves to be up a little bit higher than they're at. They might actually fill this gap up to about $34 per share. And so that's what I'm looking for. I'm actually positioned in my portfolio to take advantage of that, especially with some options as well. And then the last bonus that I have for you guys is this descending wedge pattern on this penny stock apps. Digital Turbine, APPS is the ticker symbol for it. And we broke out of the top of it, and that hasn't really happened. What happened back here, we peekabooed a little bit up above the 50 EMA and SMA. Let's really stretch this thing out and zoom in so you can see. So we broke up above it before and then sold back down. We have some rising momentum. We're getting to the overbought territory on a daily basis. We'll look at the weekly chart in just a moment, but we're above the 50 SMA. We're also above the 50 EMA, and we're continuing to climb. We want to see this volume continue to build. This isn't necessarily igniting volume, but this could be an accumulative volume that we have right here. So we're passing that consolidation, signaling that things really have been overdone for Digital Turbine, and unwinding some of that short interest, even if we don't necessarily get a short squeeze. And this is one of my 7 to 10x plays that I have out there that we could potentially, under the right conditions, see that $5 mark come out as the 200-day comes down this way, and we come up to meet it, especially if we get that igniting volume out of it. So I'm positioned with this one also with some options placed over the next month or so, that we could see a drastic movement here. Those options are already printing, and they're unrealized gains at this point in time. And so what we need to see is that continued strength and also continued increased volume. And I think that would really help us out for Digital Turbine. All right, guys. So if you like my commentary, want to hear more, check out the link down in the description for the Patreon. And also, if you want to learn to do technical analysis like I do to take your trading game to the next level, there's a technical analysis trading course also to be found down in the description. Click that link, sign on up, and head on over there and enjoy the benefits that course has to offer. And then, as always, guys, I really do appreciate your time. Thank you so much for watching. Go ahead and hit that like button. Make sure that you subscribe for more of my content. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.